Let me ask you something. What if the price of XRP has never actually been set yet? Not really. Not in the way that matters. Everyone is glued to the spot price, watching the chart, checking their portfolio every hour, asking why it isn't above this number or that number. But here's what nobody is telling you. In every single major commodity market in history, the spot market was never where the real price got determined. And XRP is not a commodity yet, by that definition. That transition, that is what's coming. And when it arrives, the number you see on your screen today will look like a rounding error. But before I explain exactly how this works, and I mean the full mechanism, not the headline version, you need to understand why almost everyone watching XRP right now is looking in the completely wrong direction. Stay with me. Welcome back. I'm glad you're here tonight because what we're covering isn't noise. It isn't speculation. It is the structural architecture of what XRP is being built to do, and the signals that confirm it is happening right now, not someday. If this is the kind of deep analysis you've been searching for, you already know what to do with that like button. Let's get into it. And if you're new here, this is what we do every single video. Data, structure, context, no hype. If you want this level of breakdown every time something moves, subscribe. It's right there. Here is the hard truth. Most people watching XRP have been trained to think about price the wrong way. They watch the spot market. They watch Coinbase, Binance, the CEX price, and they ask, why isn't XRP higher? What's holding it back? But that question is built on a false assumption, the assumption that the spot market sets the price. It does not. Not for gold, not for oil, not for wheat, not for any mature financial asset in history. Joel Katz said it clearly, and David Schwartz called it a masterly understatement. Think about what that means coming from the man who helped architect the XRP ledger. The price of gold is not set in a jewelry store. The price of oil is not set at the gas pump. The price of wheat is not set at a grain elevator. The price is set in the derivatives market, where all the buyers and sellers, the institutional players, the sovereign funds, the banks, all come together to agree on value. That is price discovery. That is how mature commodity markets actually function. And right now, XRP has no mature derivatives market. That is not a weakness. That is the setup. Because once that market exists, once healthy functioning derivatives for XRP are established, the price discovery that follows will have nothing to do with what retail traders are doing on a Tuesday afternoon. The DTCC is the largest financial clearinghouse on the planet. 3.7 quadrillion cleared annually. And there is a patent, a real filed DTCC patent that shows XRP and XLM as digital liquidity tokens within a cross-ledger liquidity framework for global asset tokenization. They did not accidentally put those logos in that document. They did not accidentally choose those networks. Ripple and Stellar were chosen. The blueprint was drawn a long time ago, and what you're watching right now is construction. But here's where the math becomes impossible to ignore. And this is the section most people skip, which is exactly why they don't understand what they're holding. Let's do the math. The DTCC clears 3.7 quadrillion annually. That is not a typo. $3.7 quadrillion per year. The global derivatives market sits at approximately $1.2 quadrillion. Cross-border payments represent $150 trillion annually. Forex alone moves 7.5 trillion every single day. Now look at XRP. Total fixed supply, 100 billion tokens. Circulating supply, roughly 55 to 57 billion. A significant portion of that is held in escrow, locked in institutional wallets, or moved off exchanges into cold storage that never returns to retail markets. Here's the math that the crowd ignores. If you want to move even a fraction of that $150 trillion in cross-border payments through XRP as a bridge asset, the price has to be high enough to make the math work. At $2, you need an enormous number of tokens to settle those flows. At $500, at $1,000, the settlement becomes efficient. The liquidity efficiency math is not a prediction. It is a design requirement built into how XRP functions as a bridge currency. Higher price means fewer tokens needed per transaction. Fewer tokens needed means less slippage. Less slippage means deeper institutional adoption. This isn't a Moonboy fantasy. It is the logical mathematical outcome of what XRP was architected to do. And the institution that will most likely be setting that price, the DTCC, clears more value in a single year than most people can comprehend. This isn't a prediction. It is a requirement. But math alone doesn't move markets. What moves markets is when the biggest players on Earth start acting on that math. And that is exactly what is happening right now. Australia just made history. The AUDD, the first regulated digital Australian dollar, is now operating on the XRP ledger, legally authorized for institutional use. Think about what that means. A government-backed stablecoin, running on XRP infrastructure. And even if AUDD never uses XRP directly for transfers, the gas fees are paid in XRP. The network demands it. But think bigger. When AUDD moves from Australia to another country, no foreign central bank is going to simply accept Australia's stable coin. They need a bridge. Every country's stable coin will need a bridge. That bridge is XRP. And what happens when Japan issues a digital yen on its own ledger? When the EU issues a digital euro? When a dozen sovereign stablecoins all need to settle against each other? There is one neutral, fast, scalable bridge currency built for exactly this moment. Meanwhile, the Bitwise XRP ETF is now the largest XRP ETF in America. $10 million in inflows this week alone, and the CEO says those flows are not slowing. Institutional money is moving, quietly, methodically, without announcement. And then there is X Money, 2014, Ripple partners with Cross River Bank. 2026, X Money launches with Cross River Bank holding deposits. That infrastructure overlap is not coincidence. That is a chain. Elon Musk does not build payments infrastructure on a whim. X Money is real. The integration path is real. And the network that is cheap, fast, and globally scalable is the obvious choice for what X Money needs to become. Ask yourself, does a company the size of Bitwise move $10 million into an XRP ETF as a gamble? Does Australia license a regulated digital dollar on XRP infrastructure without legal certainty? They don't gamble. They position. A lot of people find this channel right when things start to move. If you're one of them, stay connected. You know where the subscribe button is. And I want to ask you directly right now, do you think the institutions are fully positioned in XRP yet, or do you think they are still loading? Drop your answer below. One word is enough. It tells me everything. Here is where the clock becomes real. JP Morgan has identified the Digital Asset Clarity Act as a catalyst for altcoins like XRP, and specifically called out the grandfather clause. Under this framework, tokens that were initially classified as securities can transition to commodity status once they are sufficiently decentralized and the issuer no longer exercises a managerial role. That language unlocks broader secondary trading. It allows institutional investors to use traditional brokers. It allows banks, BNY Mellon, State Street, to directly custody digital assets. The Clarity Act also creates a new class for digital commodities overseen by the CFTC, removing them from the SEC's jurisdiction entirely. Small transaction tax exemptions for everyday crypto payments, a $75 million fundraising grace period for new projects, and critically, clearer custody standards that open the door for every major financial institution to offer digital asset solutions directly to clients. The clock started approximately 5 months ago. I believe you are looking at a 2-year window, which means the window closes around 2028, not 2030. If this legislation does not pass before the midterms, it could be delayed another 12 months. That is the risk. But even if the US moves slowly, the rest of the world is not waiting. Australia already moved. Japan is already moving. The global regulatory architecture is being built around XRP infrastructure, whether Washington is ready or not. But catalysts alone do not explain why the window is shrinking faster than most people understand. And that is what I need to show you next. We are moving from an era of accessibility into an era of scarcity. Right now, you can buy XRP, you can buy whole tokens, you can accumulate at prices that, relative to the derivatives market pricing that is coming, are essentially free. That changes the moment regulatory clarity arrives. The instant that happens, the risk premium embedded in XRP's price today collapses. The institutional floodgates open, and the money that has been sitting on the sidelines, patient, disciplined, waiting for legal certainty, comes in all at once. The price does not drift upward, it gaps, and then FOMO hits retail, and then more people sell their XRP on the way up than ever sold on the way down. I have said this for a long time. More people will be shaken out on the way up than on the way down. When the price dips, most XRP holders hold. They have conviction. But when the price rises and they suddenly see a profit, even diamond hands get tested. They sell at $5. They sell at $10. They sell at $50. And they wake up one morning and the price is set, structurally, institutionally set. And it is at a number that retail can no longer afford to accumulate. Once a token enters a multi-signature institutional vault, it does not come back to market for a 10% gain. It is gone. The door is closing, not slamming, closing. Quietly, methodically, the way institutions do everything. I know some of you are feeling the weight of that right now. The red candles are real. The sideways movement is real. The doubt is real. So let's address it directly. Being early feels exactly like being wrong, right up until the moment reality catches up. I know the current price is frustrating. XRP barely above $2, headlines everywhere, Iran conflict, Bitcoin dominating the conversation. It feels like nothing is happening. But as an analyst, I am trained to separate noise from signal. And right now, the signal has never been clearer. Billionaires are openly stating that Bitcoin cannot be adopted by central banks, because it lacks fungibility and privacy, not a fringe opinion, not a conspiracy, a structural analysis being stated publicly by institutional figures, a public ledger that shows every transaction, every wallet, every address. That is not something a sovereign wealth fund or central bank will ever accept. That is not XRP's problem. XRP was built with a different architecture. And the same people saying Bitcoin fails on those two dimensions are also saying there may be room for a crypto asset that solves for privacy and fungibility. They just haven't found it yet. But you and I both know it already exists. The market cap flip from Bitcoin to XRP, when it happens once and holds, even briefly, the psychological shift will be permanent. The money will move so fast, people will be shocked. But that moment only benefits the people still holding. And that brings me to the most important thing I want to leave you with today. Something I do not say lightly. Before I close, I'll be breaking down the next phase of this regulatory timeline in the next video. If you want to be there when that drops, you know what to do. Here is the final thought. The question everyone is asking is, when does XRP go up? But that is the wrong question. The right question is, who will still be holding when the price is no longer set by retail on a spot exchange, but by institutional actors in a derivatives market that clears $3.7 quadrillion a year? The NVIDIA CEO said AI will create more millionaires in the next 5 years than the internet did in 20. But think about what he did not say. He did not say those millionaires will sell everything at the peak and walk away. The people who built generational wealth in every industrial revolution stayed positioned. They put their assets to work. They did not sell their infrastructure holdings because the price went up. And XRP is not just a currency. It is not just a payment tool. As AI agents emerge, as autonomous financial systems begin operating around the clock, they will need a settlement layer. They will need a bridge. They will need something fast, cheap, scalable, and neutral. The AI money is the XRP you are holding right now. Price is a distraction. Infrastructure is the reality. Stay patient, stay rational, stay positioned. And as always, we don't wait for the future. We plan for it. Now I want to hear from you. Now that you've seen the full picture tonight, what is the single signal you are watching most closely going into this next phase? Drop it below. I read every single one. See you in the next video.